Hello there, I'd love to welcome you to this video, and today we're going to look at why most traders lose and how smart traders win by reading sentiment and not noise. So we're just going to dive straight into it. Before I go on, I'd love to thank my mentors, Robert Kiyosaki, who wrote the book Rich Dad Poor Dad, Tim Sykes, who wrote the foreword to the book The Penny Stock Course, and finally Matthew Greta, who wrote the book Rocket Stocks, and you can find all their books on Amazon Kindle. So today we're just going to go deep into one indicator called sentiment. Now, last time we went through this, so I think we're going to, I don't know where we ended. I think we ended here, right? So we spoke, I think that was like 2 videos down. This is what we saw last time. We talked about trading crowd, greed, trading on breaking news, uh, fake gurus. We spoke about that, and now we're just going to continue from where we left off, where the smart traders alternative sentiment plus technical. So instead of rushing into chaos, elite traders follow a simple, quiet philosophy. They trade on sentiment and technical analysis. Let the charts reveal real intentions, not emotional reactions. Focus on pure technical analysis. Price tells the truth, indicators confirm it, and patterns guide it. So the price tells the truth, indicators confirm it, patterns guide it. Take fewer trades and make better trades. The fewer trades you take, the less you expose yourself to risk, and the more focused your decisions become. This is how professionals trade. There's no noise, no stress, and no FOMO. Now, the real problems you are trying to avoid. So these are not imaginary problems. They are real, painful, financially devastating events. So market drops 20%. Now, if you're over leveraged, emotional guessing, you get wiped instantly. So usually you hear gurus talking about you will go down to zero. This is what they're talking about. The market crashes 50%. Most retail traders never recover from these losses. A good system protects you before the market nukes your account, and this is a very good thing to remember, right? A good system protects you before the market nukes your account. Now, but wait, isn't trading impossible? Let's handle the biggest objections head on. Objection number one: you can't make money online. Truth: you can make money online without skill, just like you can be a doctor without training. Trading rewards knowledge plus discipline, not randomness. So you hear people saying, you know, you can't make money online without skill, right? Just like you can't be a doctor without training. So you just need skill. So some of these things, it's not that it's hard to make money. No, it's just that it's just that not that it's hard to make money necessarily. No, it's just that you just need skill and training. Leverage is dangerous. The truth is, leverage isn't dangerous. Now, misuse of leverage is, right? So leverage is basically borrowing money to trade. So professional traders use small control leverage, just enough to increase returns, never enough to destroy an account. And this is the key that you want to remember, right? You want to use controlled leverage. Objection number three: trading is a zero-sum game. Truth is, yes, trading is zero-sum, but the advantage goes to those who understand sentiment, timing, and risk. So zero-sum basically means where you have high demand but low supply, right? So that's the zero-sum game. So you haven't gone down to zero, you just cannot meet demand. So the best way to do that is through sentiment, timing, and risk management. So you profit by avoiding panic and greed, right? I would change this. I wouldn't say you avoid them. I say by knowing how to use, not by avoiding. I say by that's the best way to put it, right? So you profit by knowing how to use panic and greed. I think that's the main thing I would like, say. Like that's what you have to focus on. You profit by knowing how to use panic and greed. Right? The value proposition. Why this strategy works. So remember, the strategy is very simple. Okay, sentiment, timing, and risk. Or to cut long story short, you want to use sentiment plus technicals, right? So use market sentiment. And so why this strategy works: you trade less, you think clearer, and you win more. This approach gives you clarity instead of confusion, discipline instead of gambling, consistency instead of chaos, safety instead of risk addiction. So yes, there is something called risk addiction, and risk addiction is very common, especially amongst um, addicts, gamblers. And that's what you want to try to avoid. You want to try to avoid risk addiction. All right. Now you get to grow your money quietly with confidence without chasing the market. And this is very, very, very important. Conclusion: the market doesn't reward noise, it rewards control. All right. So basically, you have to take advantage of market noise. Now, if you're tired of fake gurus, emotional swings, blown accounts, endless screen time, then it's time to switch your strategy based on real market behavior. So the strategy is very simple: sentiment plus technical analysis plus fewer high quality trades. This is how professionals trade. This is how you avoid the traps that destroy amateurs. This is how you build long-term wealth, even when the market drops 20, 30%, or 50%. That's why I talk about the rocket booster strategy. So the rocket booster strategy is basically you stop the noise, you catch the breakouts, and you win big. Now, in markets, real opportunities don't come from hype. They don't come from fake gurus showing buy Nvidia. They don't come from chasing whatever stock is trending on social media. Real opportunities come from price actions, institutional sentiment, and clean structure, not noise. And this is very much important when we talk about institutional sentiment. So you have to understand the power of breakouts. And we're just after this, just stay up to the end of the video. We're going to dive into gold and silver, because this is exactly what's happening in gold and silver. Right, we have a breakout. And so what is a breakout? When prices hit new highs above 50-day moving average and 200-day moving average, something powerful is happening behind the scenes. So what is happening behind the scenes? Pension institutions are buying institutions such as pension funds, hedge funds, and asset managers and smart money. These institutions are buying, and that's what's causing this breakout. Okay, so these institutions are basically buying, and that's what's causing the breakout. So you may be thinking, okay, what's causing this breakout? What's with the breakout? I know that. So that's what's happening. Right, institutions are buying. I know you want me to dive straight into the charts, and that's okay. So I'm loading the chart behind. So after this, in this presentation, I'm going to show you a chart, and then we're going to conclude this live session. Now, it's very important for you to realize that sentiment is coming from these guys. These are the guys who give you the sentiment, right? And it's very important to understand what they are thinking. If you are looking at smart money as managers, you really focus on volume. If you are using hedge funds, then you focus on volatility, right? So basically, what's backing up the sentiment is volatility and volume. To cut a long story